Hi everyone. How you doing? You getting by? You hanging in there? Tough times right now. The market is down, Bitcoin is down, everything is down, everything is red right now. Bitcoin is at 19,000 flat. Actually 19,056 cents according to the coin market cap widget that I have on my phone. Ethereum is at $1,024.49 and my very favorite microcap little itty bitty token Giddy is at 6 cents, 6.76 cents. Everything's down. Bitcoin's down over 5%. Ethereum's down over 7%. Giddy is down almost 2%. And that's where we stand. But you know, it's never a boring day in Bitcoin. Even when the market's down, I actually looked at my portfolio. And as it turns out, measured in Bitcoin, I'm up because I have a little bit in Giddy, and Giddy is down less than Bitcoin, percentage-wise, right now. Silver linings, folks. I actually saw something earlier today that talked about how we're all losing money, and for a minute, I didn't understand what he was saying because I just don't think about the dollars nearly as much. I think about my Bitcoin stack. How much Bitcoin do I have? Well, I'm fine in Bitcoin. My Bitcoin stack has not gone down. I'm up in Bitcoin. What are they talking about? If you think in long term, if you think years rather than weeks or months, you're going to be fine, friend. You're going to be fine. In the meantime, it's a crazy ride. Let's look at what's going on right now. Grayscale. The SEC denied our application to convert Grayscale Bitcoin Trust to a spot Bitcoin ETF. So, Grayscale has been around for a while. They have the Grayscale Bitcoin Trust. This is a form of Bitcoin exposure for conventional investors. You can buy exposure to Bitcoin in the conventional markets by buying the Grayscale Bitcoin Trust. What they want to do is to have but it's not exact. Sometimes it's at a premium, sometimes it's at a discount. It's exposure, but it's not exact. A Bitcoin ETF would be every Bitcoin that they buy, that somebody buys on the market, would be backed by actual Bitcoin in custody with Grayscale. Well, the SEC denied that application. And I can't understand what's going on with Gary Gensler. He recently said that Bitcoin is a commodity, and it's the only one that's a commodity. Every other cryptocurrency out there is more than likely an unregistered security. So what gives, Gary Gensler? Are you into Bitcoin or not? I actually saw a tweet earlier today that was like, is Gensler a Bitcoin maximalist secretly, low key? Because he says Bitcoin is a commodity, everything else is an unregistered security, but he keeps denying the ETF. Of course, there are others who say that an ETF is just paper Bitcoin that is a false sense of assurance and you need to actually have self-custody. They're more or less right. Depends on what time scale you want to talk about. Well, they talked about this on Squawk Box, CEO of Grayscale, Michael Sonnenheim. Sonnenheim? It's got an S in there. Would not have thought that would have an S. Let's listen to what Michael Sonnenheim has to say. Forgive the audio, friends. Stick with me. We're going to do the best we can. Here we go.
Is there a precedent for this sort of action to sue the SEC for rejection?
Well, Melissa, it's been a busy 12 hours for the Grayscale team. Of course, last night getting the SEC's decision, we were, of course, very disappointed, but as an organization, we were ready. Regulators do get sued, and it does happen frequently. Last night, after receiving the SEC decision, our attorneys almost immediately filed a petition for review with the appellate court in D.C., and that starts the litigation process contesting the SEC's decision, which we, of course, vehemently disagree with.
What is the core thrust of that suit? If you can just give me sort of the elevator pitch, so to speak, on why the SEC is wrong in this decision.
Well, we've laid out these arguments throughout the last couple of months leading up to this decision, really looking at the fact that the SEC is acting arbitrary and capricious by continuing to approve Bitcoin futures-based ETFs while continuing to deny spot Bitcoin ETFs. And when you look at the Administrative Procedure Act, which is really what governs the way that regulators have to govern, they have to be treating like issues alike. And in this case, they're not. They're actually discriminating against issuers like Grayscale who are trying to, bring a product further into the U.S. regulatory perimeter here.
All right, there it is. Sonnenschein, I was saying his name incorrectly. The SEC supposedly is protecting retail investors by preventing them from buying a Bitcoin spot ETF. But people can buy Bitcoin itself proper, so they're not protecting that. Maybe that's not under their jurisdiction. But other assets are also down tremendously, right? You're protecting them from what? Volatility? Welcome to the 2022 market. Everything's volatile. Netflix is down hard. Everything is down. What are you really protecting people from? As Michael Sonnenschein has noted, most people in the crypto and Bitcoin and blockchain and Web3, whatever you want to call it, we need a better umbrella term for all of this. Most people in this space think that the SEC, that Gensler is being arbitrary and capricious. We don't understand the logic. What are you talking about, man? Come on. People want this. So it's weird, but it is what it is. However, there are other ETFs that are moving forward. There is already a spot ETF in Canada, and now it looks like Europe's first spot ETF will go live in July. I believe this is in Amsterdam. First spot Bitcoin ETF approved to launch in Europe in July. Meanwhile, America is still protecting investors. Man, does anyone think that the government is here to protect you anymore? I sure don't. Here was an interesting observation from Ki-Young Ju, who is, according to his bio, CEO at CryptoQuant.com. He's a crypto analyst. Opinions are my own. Well, aren't all of our opinions our own, really? Unless you're a PR professional or the press secretary of the United States, in which case your opinions are actually just lies. From Ki-Young Ju, everyone is talking about bearish things, but most of them haven't left the crypto market. They're just waiting for the bottom. Bitcoin market cap decreased by 70% from the top, while stablecoin went down by just 11%. So look at this. You got Bitcoin on the left, you've got stablecoins on the right, total supply, all stablecoins on the right. People have not left the crypto space. They've parked their money in stablecoins looking for another rally, waiting. People are basically in cash. There isn't another real out-in-the-world asset that they're trying to flee to. People just want money, as it turns out. They want stable money. And they'll take whatever the stablest money is, even if that's US dollars that are melting at 8% annually. Oh, volatility. It hurts, man. It hurts, but in the long run, we'll all be stronger, right? This from Bitcoin Archive, one of my favorite follows on Twitter. If you're not following them already, I would highly suggest it. Breaking: El Salvador to build $200 million solar-powered Bitcoin mining facility. This rings similar to their volcano initiative, which was to have a mining facility powered by volcano heat, literal volcano magma flowing out of the earth. This is interesting, not just because it's something big that El Salvador is doing, but I actually think that this is a model. I think El Salvador is the first to do this. Conventionally, nation-states have relied on large institutions that are controlled by the West and predominantly the United States to get money to do development. You have the International Monetary Fund and things like that. But those are often seen as predatory. If somebody defaults on their loans from these International Monetary Fund or others, what happens is that they're basically owned by the IMF. And boy, I sure hope I'm getting that institution correct and it's not another institution, because there are a whole lot of three-letter institutions and I can't keep them all sorted. But the mechanics are simple. If you fail to pay the loan that you took out as a nation state, then basically you get owned. But with this solar-powered project or other energy Bitcoin mining-backed projects, the mechanics would be different. Even in a worst-case scenario, everybody still gets paid off. Everybody retains their de facto sovereignty. As long as you're still mining Bitcoin, maybe you lengthen the term of the payback. but you don't get owned by the loaning party. This is better for developing nations than existing infrastructure. This is way better. So this is an underrated mechanic in the Bitcoin space. I think very big picture, 30,000 feet, this is really important. I think this is a model that other nations are going to follow because it works better. The worst case scenario is still a much better outcome for that nation than if they had just taken out a loan from the IMF. Look for more of this, not just from El Salvador, but many developing nations. And hey, if you're a sovereign nation leader watching my little YouTube channel, here's some free advice. Set up a Bitcoin mining facility and take out a loan to do that, and you can pay it back with your Bitcoin that you've mined. I'm oversimplifying it, but you take the meaning. Oh, come on. Is that tweet no longer available? Ooh, looks like one of the tweets that I had is now gone. Moving on. This is from Jimmy Song. If you're not familiar with Jimmy Song, he's been in the space for a while. He has his characteristic cowboy hat. Always wears that cowboy hat. By his own description, he's a Bitcoin expert, open source coder, and follow me to learn Bitcoin. Author of 4 Bitcoin books, writer of for Bitcoin magazine. Okay. Jimmy Song is a Bitcoin maximalist, and he says, I like Nick Carter's article on Bitcoin and energy use, but he's completely wrong on NFTs, DeFi, and the utility of other chains. Like many VCs, he doesn't understand what decentralized means. Spot the number of errors and logical fallacies in this paragraph. Okay, before we dive into the paragraph, let me offer some commentary on the personalities at play here. Jimmy Song has been in the space for a long time, and by virtue of how long he's been in, he's become a very prominent personality, right? He's somebody that's been around and has not left the space. If you're somebody who was early into Bitcoin and invested and bought and became a thought leader and actually stuck around, you're still a big personality today. That's Jimmy Song. But I've seen Jimmy Song speak before at conferences, and it was the least compelling talk of the conference. I've also listened to his podcast, not extensively, but pretty invariably when I listen to his podcast, I find myself unimpressed. Jimmy Song, I don't want to denigrate anybody with whom I probably agree a great deal, but Jimmy Song is not the most sophisticated thinker on topics in this space. Nick Carter, on the other hand, is incredibly sophisticated and thoughtful, and I'm totally biased here. Just going to come out and say it. I am biased in favor of Nick Carter rather than Jimmy Song. I have a very favorable opinion of Nick Carter. I have a way less favorable opinion of Jimmy Song. Let's see what Nick Carter said that Jimmy Song says is full of mistakes and errors. Elsewhere, smart contract stuff is interesting and worthwhile. Rollups and other interesting L2 models are gathering steam. DeFi is worthwhile and getting more sophisticated with the rise of the under-collateralized lenders. NFTs aren't going away and are getting more creative and useful. Non-monetary applications like decentralized social graphs or decentralized domain systems are gaining traction and genuinely matter. None of that is getting built on Bitcoin right now. The critical mass of developers... Give me 1 second. Give me 1 second. I have to walk away from this for 1 second. Hi, I'm back. Mysteriously, something on my computer just started talking, and it was, I'm sure, getting in this audio. You could hear it. Back to what Nick Carter said. The critical mass of developers, liquidity, and dev tooling is elsewhere. Ethereum isn't going to vanish, no matter how hard the maxis pray to Gensler. DeFi liquidity isn't going to dry up. What's actually likely to happen is Bitcoin, the network, and the asset will be decoupled, with Bitcoin settling on other transactional spaces. That's how Bitcoin and DeFi will be harmonized. The maximalists coming at me lack the perspective and depth to even consider something like this. They are intellectually stunted. Oh, them's fighting words, Nick Carter. But, full disclosure, I am inclined to agree with Nick Carter here. It is undeniable that the vast majority of the momentum for things like NFTs, DeFi, all of it, anything that's not just money, anything that represents smart contracts or other assets, all of it, The vast majority of it, the overwhelming majority of it, is being built on Ethereum or compatible chains. That's just the reality. You can't honestly look anybody in the eye and say, no, NFTs and DeFi and other instruments they're really gaining steam on Bitcoin. Now, I understand that L2, layer 2 solutions are being built on top of Bitcoin, and I'm actually very bullish about those, excited about those. I want to dive deeper on those, figure out what's going on, and whether we actually have a path to adoption with those tools. That said, the present reality is that almost everybody is building on Ethereum for those kinds of tools and ecosystems. The metaverse, NFTs, DeFi, however you want to define DeFi, they're all being built on Ethereum. And so Jimmy Song is saying, like, spot the number of errors and logical fallacies in this paragraph. To which I say, Jimmy Song, show me the lie. Where is Nick Carter wrong? I actually don't see the logical fallacies that you're talking about. And I tend to agree that Bitcoin maxis, they are intellectually stunted. This is one of the reasons that I hesitate to call myself a Bitcoin maximalist. If you accept a dogma, and maximalism absolutely is a dogma, if you accept it wholesale, if you say this is basically my religion or pseudo-religion, you have now forfeit your ability to think independently. You will, consciously or not, begin using the tropes that get repeated with that pseudo-religion. You're going to stop thinking critically on items because the answers are already provided. You see, this book of scripture, my maximalist scripture, will tell me the answer. Sorry, guys, this isn't a religion. You have to think critically for yourself. There is not a predetermined outcome. There is no crypto god that's going to dictate the final fate of this space. It matters what people are doing right now. Right now, they're building DeFi, NFTs, all of that on a different chain. That's a reality that you got to grapple with, like it or not. And I don't like it. I wish it were otherwise. I wish Vitalik Buterin and the other founders of Ethereum, instead of launching Ethereum, I wish they had said, hey, what if we build a layer 2 solution on top of Bitcoin? You see, because Bitcoin's pretty good at money, but we want to do other things that aren't just money and transaction. What if we did smart contracts on a layer 2 over top of Bitcoin? Imagine for a minute how dramatically different the entire ecosystem would be if that's what they had done. But if that's what they had done, they wouldn't have been able to milk as much value out of the retail investors and the follow-on investors that came into Ethereum and other chains. I'm not necessarily projecting some kind of malice, but that is the truth. They've been able to enrich themselves dramatically more, I would argue, at the cost of a better system. If they had just built a Bitcoin L2, we would be in a very different place. Just in, from Bitcoin Archive, just in, OpenSea email data has been leaked. This is definitely news. It is not surprising. This happens all the time. If you have not checked with a service like Have I Been Pwned, go ahead and search that, P-W-N-E-D, Have I Been Pwned. You punch in your email, and I know this could totally be a honeypot for malicious activity, but I don't believe that it is. Put in your email and it will tell you whether your email has been leaked on the darknet to malicious hackers. And it will tell you which hacks that happened in. This kind of stuff happens all the time. This is the peril of a centralized web. There are honeypots all over the place. An employee of our email vendor, Customer.io, misused their employee access to download and share email addresses with an unauthorized external party. Email addresses provided by OpenSea by users or newsletter subscribers were impacted. So this happened to OpenSea, and people will almost certainly start getting phishing emails about NFTs. And if they aren't thinking, if they're not on their guard, or they're like tired or otherwise cognitively impaired, because that's real, man. You don't think as well when you're very tired. If they get caught at a bad time and they're not thinking, they can get taken advantage of, and their wallets will be drained as a direct result of this hack. This stuff happens all the time. It's pretty depressing. It's something that the crypto faithful are hopeful that a new infrastructure for the entire web can solve. We are, as yet, years away from that being a solved problem. From Parker Lewis, who is Oh, he doesn't put his job title in here. Well, I can tell you that he works at Unchained Capital. Get your Bitcoin off exchanges, Coinbase, Gemini, and platforms that promise you, quote, yield, BlockFi, Nexo. If you need help taking control of your own private keys, our concierge team will help take you from counterparty risk to censorship resistance. This is great, actually. There need to be more services like this that are helping people figure out how to do self-custody properly. This yield situation looked really easy until all the dominoes started falling in the last couple months. It's not easy, and it's not as secure. Self-custody with an educated person, somebody who understands the mechanics of self-custody, is much more secure for them and better for the overall ecosystem. And somebody like Unchained Capital is saying, we can help you do that. Yeah, I mean, we're not going to give you yield. We're just going to help you do it yourself. The world needs more of that. From Michael Saylor, Bitcoin is never boring. Saylor, notably, just bought a lot more Bitcoin. He's buying the dip. He's always buying the dip. And he's right. It's never boring. Even when the market's down, the price is down, and the speculators disappear, you're left with the true believers, and they're still building, and there's still a lot to talk about. It's never boring. Michael Saylor, speaking of, owns roughly 130,000 Bitcoin. Think that's a lot? Roger Ver, who we talked about in yesterday's stream, Roger Ver used to own 400,000 Bitcoin. He'd be one of the wealthiest people in the world today, but instead, he pissed it all away on Bcash. Painful. That is painful. Poor Roger Ver. Literally, can you imagine? I would have been one of the most wealthy people in the world, but he made some wrong bets. Here's the truth, guys. Roger Ver, Jimmy Song. Some of the earliest people in this space were not necessarily the smartest people around. And as time goes on and Bitcoin proves its resilience and importance, smarter people are drawn to the space. That's great. But people like Roger Ver, and I'm going to include Jimmy Song, who stayed, he's just as devout to the Bitcoin core blockchain as ever, where Roger Ver forked off his own blockchain. They were not terribly deep thinkers. Oh gosh, hurts me to say that. It sounds mean. I don't want to be mean, but it's the reality. You need to find the people who are careful, methodical, thoughtful. I am trying to be that person. A counter example to Jimmy Song and Roger Ver would be somebody like Balaji Srinivasan, whom I have fanboyed about endlessly on this channel. Balaji is just an incredibly insightful, deep, thorough thinker. Find people like that who have a track record of being right well ahead of the crowd, long before the crowd. If somebody keeps being right long before the crowd, pay attention to that person. If they exhibit that as a habit. Speaking of Roger Ver, here's me at Ethereum DevCon in 2017. Oh, there's Justin Drake, whom you've heard me speak about before. He is now one of the core developers on Ethereum. I met him and spent some time with him. Here's the beach. Oh, it was glorious. DevCon in 2017. And here is me with Roger Ver, who would have been one of the wealthiest people on planet Earth had he sat on his thumbs and done nothing else after buying a bunch of Bitcoin early on. But he didn't. He didn't do it. He played he played a general in a war fighting what became the Bitcoin core chain, and he lost. And now it appears that he is bankrupt. We talked about this yesterday. There is an exchange that's claiming he owes them $47 million. Poor Roger. I also met Eric Voorhees at that conference, which was really cool. If you have not read Ben Mesrick's book, Bitcoin Billionaires, it's a good read. It talks about the Winklevoss twins. It talks about Roger Ver. It talks about Eric Voorhees. It talks about Charlie Shrem, another fellow that I've read. He is in my documentary film, Life on Bitcoin. These were all very early to the Bitcoin party, and some of them have fared better than others. I think Eric is doing incredibly well. I think Eric has played his cards right. Roger appears to be bankrupt. Charlie's learned and grown a lot. If you read the book, I think it's fair to say that he was characterized, probably accurately, as very young and naive and inexperienced when he got started with Bitcoin. And time and experience have helped Charlie grow up. He's got his own podcast about Bitcoin, and he's good. He's good now. But it's interesting. Like Michael Saylor said, there's never a dull day in Bitcoin. There's always something to talk about. There are all these characters and stories and high stakes. It's part of what drew me to the space in the first place, made me want to make a documentary film on it. Literally, there are more stories to share here than you could ever exhaust. And they're fascinating, to be perfectly honest. Lark Davis, again, lowest monthly RSI ever for Bitcoin. Just bear market things. RSI stands for risk something index. Oh, shoot. I can't remember what RSI stands for. It's a measurement of the risk on an asset. Oh, shoot. RSI definition. Well, now you know. Relative strength index. There we go. I keep thinking that that's risk. It's not. It's relative strength index. So the relative strength index, this is putting Bitcoin at a historic low, not on price, but on relative strength. Bitcoin is down hard, and according to the RSI, now at its lowest point ever, it's down harder than just about any other kind of asset. Now, that being said, inside the cryptocurrency space, Bitcoin is the safe haven. It's crazy, right? And even inside the cryptocurrency space saying that Bitcoin is a safe haven, that doesn't paint the full picture. As we just saw in a previous tweet from somebody else, where is he? Where is he? We're looking. Oh, come on. Shoot, did I close the tweet? No, there it is. This is the one I was talking about. People are fleeing to stablecoins, effectively dollars, dollar equivalents, as they say. But this is, on the left, Bitcoin, and this is the safe haven asset relative to other cryptos. But relative to Bitcoin, dollars have been the safe haven over the last few months. It's all relative to your time frame. Zoom out to sufficient many months and years, and Bitcoin has been doing fantastic, much, much better than dollars, obviously. Go back just a couple years, but in the months time frame and shorter, dollars are where people are fleeing to. Lowest risk, I'm sorry, not risk, relative strength index of all time. From Vailshire Capital's Jeff Ross. Bitcoin still chilling on the underside of its 200-week moving average. So 200-week moving average. This is the average price over the past 200 weeks. And if you look at a 200-week moving average, it's basically a line straight up, right? Normalizing the volatility that we see hour to hour, day to day. This is one of very few times that we have seen Bitcoin trading under its 200-week moving average. It happened way back in 2015, end of 2015, beginning of 2015, and then it happened at the beginning of 2020 very briefly in that flash crash at the beginning of the pandemic. And maybe if you go back further, pre-2015, there might be some dips down there that show it before the 200-week moving average, or, maybe not. What this is indicating is my take. We might not be at the absolute bottom, but we are at a historic low that is a good buying opportunity. Now, I'm taking what cash flow I have and putting it into basically dollars, stable coins, USD coin, and Bitcoin, variously. And could it go lower? Will we go lower? Obviously possible. It did today, right? It's foolish to assume that you know what the market will look like in the near future. Again, Bitcoin today is down 5.5%. We're at $18,991 as I record this. It happens, you guys. Volatile times, not just in Bitcoin, but macroeconomically. Again, from Lark Davis. Unless something dramatic happens, then we could be closing another weekly candle under the 200-week moving average for Bitcoin. There it is, folks. 1, 2, 3, third week. And I think it probably will. These red candles above that, look at that. 1, 2, 3, 4, 5, 6, 7, 8, 9 red candles in a row without a green candle. That was mind-blowing when it happened, because previously, I think the record was 5 in a row, and then we went to 9, almost doubled it. These are historically unprecedented times, Again, not just in Bitcoin, but macroeconomically. You don't know what the future holds. I certainly don't know what the future holds. What I do know is that Bitcoin is resilient to the point of being near immortal. And I'm talking about the network, its function, its ability to transfer value from A to B. And if you hold it in self-custody and you do that in a cryptographically secure fashion, then nobody else can get it. Those two facts alone are enough to give me confidence in the utility of the network, that I suspect that its purchasing power will go up eventually. And I'm not talking many, many, many years. I don't think we're going to go out a gazillion years. I'm not going to have to wait till retirement for this. I think it's going to go up in the next year, in the next couple years. We shall see. Anybody who's held Bitcoin for 4 years has made a substantial profit. That's just the historic trend. Maybe we break with that. I kind of doubt it. This from Kevin Svensson. Questionably a cyborg, he calls himself. I don't really know who Kevin is, but I liked the chart. The trajectory of this downward parabola suggests that there is still room to move down, but we're getting closer and closer to major support ranges. So he's drawing out to past trends, prior years, and seeing if maybe there's still room to drop. He suggests that there is. I've got a friend, guy that I know, who's really into Monero. He's not really into Bitcoin anymore, weirdly enough. But he thinks we could go down to 10,000. He said, I think 10,000 is reasonable. I don't think that's reasonable. Do I think it's possible? Anything's possible. The good technical analysts out there are emotionally divorced from this stuff, and they don't make absolute assertions. And they would tell you that anything is possible. Here's another interesting chart that I thought was worth consideration. The bullish phase of the great cycle 4 begins. Here's what I thought was interesting. I've never seen these circles drawn before. That's an interesting way to visualize this. Now, notably, this white line on the far right side of that is speculative. That is not where we are right now, is it? No, he's projecting out into the future. He's saying that white line is what the next couple years will look like. That would be nice. That is an interesting way to visualize. But these are just stories we tell ourselves. The best predictors are just giving probabilities. They're not giving absolutes. So something to keep in mind, something to consider, not something to necessarily bet the farm on. Dan Held, who is a maximalist and loves to meme. I don't know what the world brings next. That's why I own Bitcoin. Dan, I hold the same position. I don't know what the world holds next. It's not looking great, right? If you're looking in the world trying to find stability and something that you can rely on, what is there? What is there? What institution? What nation? What group of people? What socio-political thing do you feel so confident that you can rely on? Well, I'm not confident in the dollar. I'm not confident in the US government. I'm not confident in other governments. I'm not confident in, I don't know, what other kinds of organizations are there? Churches? NGOs? Bitcoin is probably the most reliable thing around if you're talking about a functional network, right? Not necessarily the price, because that's all relativistic, but the network itself and its utility, darn near unkillable. And if it does get killed, the only thing I can imagine doing that is something like a cosmic impact, in which case we've got bigger problems. You're going to want to have a bug out shelter in that scenario. I'm with Dan Held on this one. I don't know what the world brings next. The last 2 years have disabused me of any confidence or any belief that I know exactly what comes next. And that's why I own Bitcoin. Bitcoin Magazine tweeting saying that Bitcoin is down 71% from its all-time high, and MicroStrategy just keeps on buying more. Strong hands. I should have it up here, but I don't, so I will just tell you. I saw a clip recently of Michael Saylor, whom I like and respect and generally agree with, saying that people should sell all they have and buy Bitcoin. Sell their other assets and buy Bitcoin. Mortgage your house and buy more Bitcoin. Yikes, guys. Yikes. I think Michael Saylor can say that because he comes from this incredibly privileged position. He's incredibly smart. He actively manages his portfolio. This is his job, to manage the money that he has. For the rest of us, plebs, people who have, regular jobs or running a YouTube channel. For the rest of us who don't have mansions and multiple properties, what you need to do is survive. And mortgaging your house to buy Bitcoin in a volatile market, it's probably not survival. If you had done that, would have caused a lot of heartache in your life. Yeah. Be careful when you buy into these stories of mortgage your house and buy Bitcoin. If you can hold on that long, great. But don't put yourself in a position where you're just going to go under because you can't feed yourself or house yourself. Again, from Dan Held, Bitcoin will never go mainstream. This is a anti-electricity cartoon from 1900 arguing that electricity would never go mainstream. We see the same kinds of things at the dawn of the internet. There's every reason to believe that Bitcoin is basically another network technology that will become universal, is well on its way. And of course there are skeptics because there are always skeptics, but they're wrong. There are forces at play that even the skeptics, even if the majority of people are skeptical, they will respond to their own incentives. I mentioned recently that I'm reading a book called The Sovereign Individual, and that's the chapter that I just read. It talks about these seismic shifts in human history and how often when those are happening, they are invisible to those of us affected. Like the fall of Rome, for example, was invisible to the people who lived through the fall of Rome. They wouldn't have told you, oh yes, Rome has fallen. And in fact, the book goes into great detail to say if CNN and Wolf Blitzer had been there during the fall of Rome, and even if they had been able to let everyone in the world know through mass communication the events of the day, they still would not have connected the dots to realize, oh, Rome has fallen. Now, it's in hindsight that historians look back and they say, this event marked the fall of Rome, or this event marked the fall of Rome, and we're fairly agreed upon that point, because there was a precipitous decline in all of these other things thereafter. The de facto power shifted from the Roman government to others. Invisible to the people that experienced it. We may be going through a similar shift right now. In fact, that's why the Sovereign Individual, the book, that's why it talks about that. It thinks that the shift that we're experiencing right now is to these decentralized networks, which will disintermediate the state. And yes, we will continue to have governments, but no, CNN is not going to tell you that governments have gotten disintermediated and they cease to be important and relevant. Nobody's going to say that, even if they realize it. It's directly against their own incentives. You have to look at these things yourself. You have to arrive at your own conclusions. It's a great book, The Sovereign Individual. I do recommend it, and I am still reading it myself. Oh, come on. Tab. Oh, that's another tweet that is gone now. Well, friends, that's my stream today. Never boring times in Bitcoin. What do you want to talk about in the future? I've been doing a review of headlines and notable tweets in the space and just sharing my thoughts. But I need more evergreen content. I've got a list of things that I think are important and interesting, and I will research and write a script and share the edited video with you. But in these live streams, or even in an edited, scripted piece, let me know what you would like to hear, and we will discuss it in a future video. That's all I got, team.